Have you ever felt confused by the terms index fund and ETF? You're not alone. They sound similar. They both help you invest in many companies at once. But what's the difference? And more importantly, which one should you choose? In this video, I'll break down index funds versus ETFs in plain English. No jargon, no confusion. Just the facts you need to start investing with confidence. Let's begin. What is an index fund? An index fund is a type of mutual fund designed to track a specific market index, like the S&P 500. Instead of trying to beat the market, index funds simply try to match it. If the S&P 500 goes up 10%, your index fund will go up about the same. It's passive investing, no guessing, no stock picking. When you buy into an index fund, you're buying shares in hundreds of companies all at once. One simple investment, massive diversification. What is an ETF? ETF stands for Exchange Traded Fund. Like index funds, ETFs also track indexes such as the S&P 500, NASDAQ, or total stock market. But here's the key difference. ETFs trade like individual stocks. That means you can buy or sell them anytime the market is open, just like shares of Apple or Google. With index funds, you can only buy or sell once per day after the market closes, at the final price of the day. How are they similar? Both ETFs and index funds offer low fees diversification, long-term growth potential, passive investment strategies. In fact, both are widely recommended by financial experts, including Warren Buffett. They're both great tools for beginners and long-term investors. But the key differences might help you decide which is better for you. Key differences between index funds and ETFs. Let's talk about 5 major differences. First, trading flexibility. ETFs can be bought and sold anytime during the trading day. Index funds only trade once per day, at the closing price. Second, minimum investment. Many index funds, especially from Vanguard, require $1,000, $3,000, or more to get started. ETFs often have no minimums, and you can buy fractional shares for just a few dollars. That makes ETFs more accessible if you're starting with small amounts. Third, automation. If you like fully automatic investing, index funds may be slightly easier. Most brokerages let you schedule recurring investments into index funds. With ETFs, automation is possible, but setup can vary by platform. Fourth, taxes. In taxable brokerage accounts, ETFs tend to be more tax efficient than index funds. That's because of how ETFs are structured. They can avoid triggering capital gains more effectively. For most beginners, this doesn't matter much early on, but it's something to keep in mind long-term. Fifth, where you buy them. Index funds are often available only through major brokerages like Vanguard, Fidelity, or Schwab. ETFs, on the other hand, are available on almost any platform, including apps like Robinhood, Public, and Webull. So which one is better? Here's the truth, both are great. But which one fits your situation better depends on your goals and your style. If you want to start small, prefer flexibility like using mobile apps, then ETFs might be the better choice. If you prefer to automate everything, don't care about daily prices, use traditional brokerages like Vanguard or Fidelity, then index funds might suit you better. Examples of solid funds. If you're looking at index funds, consider VFIAX from Vanguard, FX, AX from Fidelity, SWPPX from Schwab. If you're leaning toward ETFs, strong options include VEEU for S&P 500, SCHD for dividends VT, for total global market QQQ. If you want tech exposure, you can build a great long-term portfolio using just one or two of these. Final thoughts, don't stress about choosing the perfect fund. The most important step is just to start. ETFs and index funds both offer diversification, simplicity, long-term growth. Peace of mind. So pick one. Start with $50, $100, whatever you can. Invest regularly. Reinvest your earnings. And stay consistent for the long run. You don't need to outsmart the market. You just need to own it and let time do the rest. If this video helped, hit like, comment below, and subscribe for more simple, honest investing advice every single week. This is not financial advice. Always do your own research before making any investment decisions.